Welcome back. We're seeing quite the dichotomy in our US housing market right now. So for example, in the resale market for existing houses, contracts signed or pending home sales are down by more than 10% compared to 1 year ago based on data from Redfin. In stark contrast, contracts being signed for brand new home construction is actually up by more than 30% compared to 1 year ago, based on a brand new report from the US Census Bureau just reported on August 23rd, which is today at the time of filming this video. So in today's video, I'm going to share this dichotomy we're seeing right now, but especially what's happening right now regarding sales and inventory regarding new home construction in the US. So I have a lot to share. Let's go ahead and dive right in. So regarding the resale market of existing houses, pending home sales for the month of July is down by 13.9%. These are contracts being signed between buyers and sellers of existing houses. In stark contrast, when looking at sales of brand new single family houses, it's up by more than 30%. So let me share that report with you guys right now. This report was just posted on August 23rd, which is today at the time of filming this video, which covers the month of July here. So this report from the US Census Bureau only looks at brand new single family houses. So it excludes multifamily and of course excludes existing houses of course as well. One thing I do want to mention, which I mention in every single video I make regarding this report right here, is that a new home sale is defined by a home builder accepting a deposit from a home buyer or a sales agreement signed. So therefore, this is really acting more like a pending home sale than a closed home sale. This can occur prior to a permit being issued. So therefore, a new home sale of a new single family house could be a dirt lot in which the builder got a deposit and they have a sales agreement signed. Or in contrast, it could be a house under construction, or it could be a completed house as well. But I think we all can agree here, this is a leading indication of our US housing market based on contracts being signed, right? So there's a lot I want to share in today's video. Let's first talk about the number of closed home sales, or not closed home sales, the number of sales, contracts being signed, and then we'll talk about inventory numbers as well as home prices as well. So based on this report here, for the month of July, on a seasonally adjusted annualized basis here, there was 714,000 sales of new single family houses, right? This actually came in slightly above expectations because the forecast was actually for 705,000 and it came in at 714,000. So to compare this to 1 month ago, back in June, sales increased by 4.4%. But I mean, look at that. A giant gain of 31.5% compared to July of 2022, which is absolutely crazy because remember, Redfin reported that pending home sales decreased by 13.9%, whereas new home construction is up by more than 31%. The big dichotomy in our US housing market, and you guys should be aware of though, is that the takeaway regarding today's video shouldn't be that, oh my gosh, our housing market is on fire. Builders are really taking advantage of the market right now. Buyers are looking to buy houses like crazy, because that is not the case, right? I talk about this on the channel all the time. We're seeing a huge decrease of home buying demand. But what we're seeing in the new home construction industry here is that builders are still offering incentives to home buyers right now. So for example, rates today are around 7.3%, but a lot of home builders right now across the United States are offering to buy down home buyers' rates. So instead of buying an older house at 7.5, 7.3%, it could be a scenario in which they're getting a brand new house at around 6, maybe even 5.5%. And that's actually increasing home sales for brand new houses right now. Pretty crazy. Also, I want to share this with you guys as well because the number of home sales also varies quite a bit by each of the 4 major regions. So look at the West here. I'm a real estate agent located in Sacramento, California, also in the West. Giant decrease of 21% month over month and a huge increase of 60.2% compared to 1 year ago. We're also seeing giant gains in the Northeast, up by 43.5% and up by 58.5% in the Midwest. Also, the South increased by 17.5%. So giant gains in contracts being signed between buyers and builders compared to 1 year ago. And also a giant increase in the Midwest on a month-to-month basis, up by 47%. Whereas the Northeast and the South actually recorded a decrease compared to last month. Let's also have a look at our good Uncle Fred here to look at this figure here of 714 compared to years past here. So compare this to 1 year ago. The seasonally adjusted annualized basis of closed home sales for new single-family houses was 543,000. Now it's at 714. So more or less has been increasing ever since September last year, which is pretty astonishing here. Also, when we zoom out over the past 5 years here, at 714,000, again, the pace of home sales this July is roughly on par with pre-pandemic levels back in 2019. So even though we're at roughly on par with pre-pandemic levels, we're still well below the peak that was set back in August of 2020, when back then the pace of home sales was over 1 million. Something else you guys should be aware of though is that this increase of sales up by 4.4% compared to June is quite remarkable given the fact that rates have been increasing. So for example, looking at the monthly rate according to Freddie Mac here, the daily or the monthly rate back in June was 6.71%. But then in July, the average rate was at 6.84%. So even though rates increased by more than 10 basis points compared to last month, home sales still increased by 4.4%. And again, I think this really is due to the fact that builders again are offering incentives such as buying down rates for current home buyers right now. And that's really driving home sales that we're seeing this July. Okay, let's change gears slightly here and talk about housing inventory for brand new home construction. These numbers right here, this column right here, is not annualized, but it is seasonally adjusted here. So for the month of July, there was 437,000, the highest levels since February this year, also at 437,000 back then as well. And a small increase compared to last month, a gain of 2.1, but we're still down by 4.8% compared to 12 months ago. Let's have a look at our good Uncle Fred here. So this is kind of a new development here. And keep in mind, these are seasonally adjusted. We should expect to see inventory levels increase during this time of year, but this is seasonally adjusted here. It accounts for the fact that inventory tends to decrease in the last half of the year, and it tends to peak more or less in the winter, in the summer months. So regarding this here, this is something I've been talking about on the channel here as well, is that inventory levels over the past 12 months peaked in October of 2022 and have been decreasing more or less ever since then. However, in June, we saw a slight increase and then a bigger increase in July. So this is something that we should be following here, because if this number continues increasing, especially if it actually surges, that would be a recipe for disaster regarding new home construction houses for sale. One thing I do want to show as well is how this compares to pre-pandemic levels though, because this is absolutely crazy. 437,000 new single-family houses that are technically for sale. Again, this could be dirt lots, houses under construction, or completed houses. This is well above pre-pandemic levels. So for example, back in January 2020, there was 325,000 compared to 437,000 right now. In fact, when we zoom out going back to 2008, you can really see how high the numbers are right now. Because the current levels right now, when looking at pre-pandemic levels, are the highest levels since May of 2008. Let's also talk about the month supply right now as well. It's down a whopping 27.7% compared to 12 months ago. The month supply is still fairly high right now at 7.3 months, actually down compared to last month at 7.5 months. So here's a chart showing just that. The month supply has been on a downward trend ever since really November last year. When zooming out over the past 5 years here, you can see how high these levels are. 7.3 is much higher compared to January 2020, when the month supply was at 5.7 months. Normal range of housing supply is in the range of 4 to 6 months and not 7.3 months, right? Additionally, when I zoom out going back to January of 2011, the current levels right now are the highest levels going all the way back until February of 2011, when at that time the month supply was around 8.1 months. And by the way, the all-time record low was set back in August of 2020 at 3.3 months. In stark contrast, the all-time record high was set back in January of 2009 when the month supply was at 12.2 months. Okay, let's talk about home prices for brand new home construction as well. So the median sold price was at $436,700, just slightly below $437,000, let's say. Compare this to 1 year ago, the median sale price was $478,200. By my dumb math, that's a decrease of 9% year over year. In my personal opinion, as I note right here, this decrease compared to 1 year ago is due to partially from the mix of sales. So for example, there were fewer, more expensive sales this July. Again, a sale contract being signed. So for the month of July, there was fewer, more expensive houses that sold compared to that to more affordable houses that actually got into contract as well. And a better way to put this is this right here. Here's the percent distribution of sales this July right here. So in the range of 750 plus, 10% of all sales this July came from that price range. Compare that to last year, it was 15%. In the range of 500 to 749,000, that represented 24% of all sales this July compared to 31% last year. In contrast, for sales in the range of $200,000 to $300,000, that was 13% this July compared to only 7% 1 year ago. So we saw more affordable houses that sold this year compared to last year, yet we saw fewer houses that sold for more than $500,000 compared to July of 2022. Therefore, this could be one reason why prices actually decreased by 9% compared to just 12 months ago. I also want to discuss the number of houses that sold by stage of construction, and that is not yet started, a dirt lot, house under construction, and also completed houses as well. So for all the houses that sold, again, the annual pace was at 714,000. 93,000 came from not yet started, whereas 334,000 came from houses under construction. And this, by the way, is the highest rate in at least 1 year, because 1 year ago, the pace was only 246,000. So therefore, a big amount of houses that got under contract that were under construction right now. Here's something that I follow very, very closely, especially regarding houses that sold and also homes that are still for sale. These are completed houses. 1 year ago, 167,000 was a pace that was set for completed houses that sold. This July, it was 287,000. That's a 72% increase compared to just 12 months ago. Something I talk about on the channel quite often here is that if you guys are looking to buy a house, you might want to look into buying a brand new house. And in my personal opinion, the best way to get a deal is to look at completed houses. This is because builders have a lot of holding costs associated with building or associated with a completed house compared to a dirt lot. I've seen this over and over again. We take a home buyer to a home builder, and the home builder doesn't really offer too many incentives at all for a dirt lot. Why would they, right? It's just a dirt lot. There's virtually minimal costs associated with that. Compare that to a completed house. The builder has already paid all their subcontractors, all the materials as well. So the home builder is much more motivated to give you a deal on a completed house compared to a dirt lot. And that could be one reason why we're seeing a huge increase of completed houses that actually were sold. Let's also talk about the number of houses that are for sale. So this is housing inventory by stage of construction. So again, there was around 437,000 homes for sale in the US. The vast majority of those were actually houses under construction. 254,000, again, not annualized, but seasonally adjusted. But this column right here is what I pay close attention to, because there was 75,000 completed houses that were for sale for the month of July. Compare this to 12 months ago, there was only 43,000. So again, I mention this on a channel all the time, or I should say every month here, because this column right here is something we should definitely pay attention to. So for example, if this number right here starts to increase greatly, that would imply that builders are building houses, they're completing them, but they're not able to sell them, right? And that would be a recipe for disaster for home builders. In contrast, if this number starts decreasing, that would imply that home buyers right now are gobbling up all the completed houses that builders are offering. One more thing I do want to mention this is that the all-time record low was set back in early 2022 when the number of completed houses for sale was around 32. The current levels right now are also double that, but at 75,000, this is roughly on par, or actually slightly below historical averages. Of course, a lot could change though, and I'll definitely keep you posted with latest developments, of course, all right? One last thing I want to mention regarding the number of houses that are completed for sale is this right here. The month supply of completed houses, and that number 2 is this right here. The median number of months for sale since completion. This is the month supply of completed houses. So for the month of July, it's only 2.3 months. 1 year ago, it was 2.4 months. So the month supply overall is still very, very low for completed houses, but it has been increasing as of late, and I'll definitely keep you posted with the latest developments regarding that. But what's your biggest takeaway from today's video? My biggest takeaway from today's video is this giant increase of 31.5% in the number of contracts being signed between builders and home buyers right now. Vastly different compared to the 13% decrease of contracts being signed in the existing or resale market. Pretty astonishing here. But what's your biggest takeaway from today's video? I appreciate you guys for watching today's video, and I'll see you on the next one.